Hello, ladies and gentlemen. Marty Errico, TradersAudio.com, NYMEXEnergySquawk.com, and the Energies, giving you guys your recap. Again, this is NYMEXEnergySquawk.com /TradersAudio.com /CrudeSquawk.com over here in the Energies. And we're on our Sunday night prep / weekly outlook. Let's take a look, again, as we were just talking about, we're going to take a look at crude oil. First and foremost, we are not surprised at all after seeing the big downtick that we have been seeing on crude. I mean, once the volatility got up above 40%, we knew something was going on. Now, for options people, yes, that's a huge factor for someone that trades options. For regular people, regular scalpers and traders, sometimes it means nothing to us, but there are days that it does. And these days it really has been somewhat significant because it's been showing us the activity, it's been showing us the range, it's been showing us what the potential is for the pit session. So you have to look at it at a little bit different standpoint than most traders look at it as. It's funny because every trader has their own opinion. Every trader has their own way of doing things. And the point of trading is to make money. And if you can obviously make your money and manage your success the right way, you can actually do all right. But it's funny because I was sitting in the cafeteria at the exchange yesterday, well, not yesterday, Friday morning, and I had 7 traders sitting around the coffee table who had 7 different opinions on where natural gas is going. And then the other side, they're talking about where's crude going to go. 7 different opinions, but it's just all about could you get the analysis correct and could you get that right touch. And it's all about getting that right touch, because this thing is, you guys have to remember, you have to do something unique. You have to do something that 99% of the traders aren't doing. This is actually one of the careers you want to be one of the top 1% in, which you guys already know that, the people that are here today, because I think you guys are doing all right. So we're going to start with the crude. Like I said, I'm going to take out a larger time frame and take out like a daily. I got a real ugly looking daily chart here. Nice bearish channel. To me it looks ugly, but we got some nice longer time frames. We're going to take our top down approach, meaning we're going to look at our larger time frames first, and then we're going to zoom in. And as we zoom in to a faster time frame, then we're going to really kind of keep a close eye then on, just besides, again, like I said, besides looking at just a fast time frame, we're going to look at all of them. So the multiple market divergence is telling us different things. Let me just check one. Sorry, my guest speaker is just texting me, so we'll deal with him later. So we got this bearish channel here on the 240-minute chart. We continue with the offer to the downside. That's all I can say, guys. Again, we're looking at your February contract, and we just kind of continue with the offer to the downside. You can see the last couple days have been starting to kind of consolidate and start to show and make a little bit of a range. I don't know if you noticed that, because this is a daily chart, 1,440-minute. Why am I using this chart? Because it shows no gaps in price, and I like it a little bit better. So when something doesn't show me a gap in price and it's pretty much straight consistent, I like consistency. So I zoom in and I look at where the support resistance is basically at these last 4 candles, and it's the last 4 days of trade. So we got 1, 2, 3, so 5 days we'll call it. With your high just at around 51, low down at 46.83, 46.83, right to 50 quarter / 51.89. You guys got that? So again, we're going to go the high end of the range, 50 quarter, $50.25. We're going to go with the 50.09, which is 51 even. And those are going to be very important levels for the daily time frame. So just keep that in mind. And we're going to write these down in our notes. Don't worry about it, because I'm going to take care of our notes today. I'm going to write them down for us as we just, again, get that sweet spot here. We just talked about it. 50 quarter to 51 even pretty much is what we're looking for. Why? Well, because that's the resistance that we had over the last week. This is what we had in the last now 7 days, last couple days of trade. And we want to just basically get up above these swings, and we want to get up above that trigger line. And if we can actually break an outside day and get back up above the previous high day and continue to hold above the previous high day, this is a little bit of a game changer. And what does that mean then? When I say a game changer, all it simply means is on the daily chart, we can maybe get up above that 49.36 and continue with bid, and then hopefully fill the range as we continue higher. Now, we're going to go over a couple things besides just this little bit of a chart here showing us that we have a little bit a nice bearish tone and a potential bounce off the lows. 240-minute chart, bearish, just bounced off the lows. This is almost like the equivalency of the last 7 days. Remember, we were just talking about the last 7 days of trade and how we have that trade going on. Sorry, guys, wrong goddamn market. Shit, sorry. So you can see how we're just kind of continuing with this bearish trend, the bearish downtick. It's across the board. I'm going to now first show you right here on the 240-minute because I showed you on the daily. Now I want to show you on the 240-minute chart. And the point is that we continue with bearish trend, correct? Now remember I was telling you about the last 7 days of trade that we went back and we looked out on that daily time frame, the 1,440-minute chart. What did it show us? It showed us that we were consolidating for the last 7 days just about, and the range was just around, I'd say we called it 51 even, really 50 quarter, I'm sorry, 50 quarter down to the low. What do we got going on here? Perfect scenario. So look at this. I like when I see it like this here. So we're talking 50 quarter down to 46.83, and this is going to be this range right here. And you can see this is a range that's inside a range. And what I mean by that is, for all the new people, this is a range inside the range, meaning that this range has been what we've been trading in for the week. But where the yellow lines are, that's the previous day, previous high day, PHOD, PLOD, previous low day. So what happens is right now we're in the middle of the range. We don't fiddle in the middle. Tomorrow morning, if we're trading near any of these levels, like we mentioned this before, write these levels down. They're going to be important. If we're trading down and around and near 46.83, 47.16, and we're down at the lows, you might want to look to buy the lows. If it's very firm and very strong to the downside, then obviously we would like to sell lows, but the first thing you do is you buy lows, and then if that doesn't work out, then you start to sell retracements and sell lows. So I'm writing down 46.83 is a very important level of support. 47.16, this is all in the near term. We'll go out later on and we'll get some other levels. Upside levels I'm keeping an eye on and focusing on for this range for a two-step pattern long. Obviously, after being so oversold, I have for you guys 49.60 as one of our nice major levels of resistance here. We can also use the 49.36 overnight session high, and then the 50 quarter, 50.25, 50.37, whatever hell you want to call it. So those are really good levels for crude oil on the 240-minute chart as well. Take a look at the continuous real quickly. The continuous contract now, what does the continuous exactly do for me? The continuous gives me levels. I use this chart for levels, and I just want to make sure that I got, because of course I don't have enough data loaded. That always happens to me on a Sunday night when I'm trying to get ready. But the point here is that the continuous contract gives you some accurate levels. And the accuracy in these levels are what's going to be significant for when we try to trade this in the next coming, I don't know, week or two, next coming day or two. I mean, who knows? So these levels will carry over. Okay, they'll carry over from last week and from when we rolled 2 weeks before. And that's what makes the continuous contract so significant. It holds that spot for you, so to speak. Holds that spot, holds those levels. So say we make a new higher high, in the month of January, and in April we want to look at that high that occurred in January. Well, think about it. We made a high in January, and we're going to go look back at it in April. On the April contract, it's going to be totally different than what the high really was. So you guys know what the continuous really means, the continuous contract. So, you know what I mean? That's why it's significant to look at them, because these levels will help us out, and this will either confirm or deny the levels that we have been looking at for the last couple of days are going to be useful or not. So support down below. What do we got? 46.83. That's good. We got the 46.16 is 47.16. That's good as well. Let's take a look at some upside levels here. 49.61. And that's really it. Yeah, that's it. Other than that, you can see these levels up above. So they just confirm previous high day, previous low day, and the other level here, the trigger line. But take a look at all this resistance up above. I mean, there's a ton of it. And we're talking about a ton of resistance above. Now let's talk a little bit more about some other big pieces now that we're done with this continuous contract. We're done with the 240-minute chart. We're done with the daily. I'm going to do this quick too. I just want to show you a couple other things here too that were brought to my attention this weekend before we go over natural gas. So with the crude, I had a couple news headlines that I was interested in over the last couple weeks, and the news headlines were, and they follow as this. We've been getting a new system that we've been using and watching in regards to getting news, and also getting all of our information for CME Clearport and for also open outcry trading. Now, CME Clearport, I was always having issues trying to get that one piece of volume venue, but I'm able to get it basically just booked through ICE Chat. My buddy books them for me through ICE Chat, and he'll give me anything that's significant that's over 500 lots. So as everything's loading, so I connect through ICE Chat, and then I'll be able to, it's not responding, give it a second, it has to load. So then it tells me He'll let me know any like 500 or 600 lot orders, or maybe even 1,000 lot orders that are greater. Like for instance, as we continue to zoom in for the crude oil, and we wait for all these pieces of information loading, I don't want to break the rhythm for the crude. We have that bearish trend for the crude. We have our levels, and I want you guys to now take a look at the 21 range chart, because the 21 range chart is going to be very significant and important to watch. The 21 range gives us this little bit of a sideways range that we definitely confirmed. Remember, on the daily, it was the last 7 days. This sideways range has kind of confirmed the market sentiment. And as you can see right now, we're still in that bearish channel, and we're still continuing to kind of hold in that bearish channel, and we're really hoping to see if we can maybe get a break out of this channel finally and get a little bit of movement and try to get some type of value in this market, because it's just been killing us. It's just not the fact that the value's not there. There's plenty of value there. Just when we get chop for almost 7 days straight, it's just very annoying. You know what I mean? It's just very, 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 very annoying. I just hate it. So as long as we can get out of these ranges, we'll be in good shape. And it starts with just getting out of the 51s. That's all it really starts at. Getting out of 51. Once we're out above 51, we're good. And then we can buy a nice two-step pattern long. So we got 50 quarters and 51s. Those are two nice levels that I'm going to definitely keep an eye on. So 50, 37, 50 quarters, and 51 evens. We're looking to break out above those levels, and if we could, we are getting a two-step long right back up to the high end of the range. Natural gas, same deal too, but let's focus on crude. So crude, you can see, is still now just trading kind of in the middle of the range. We don't necessarily want to fiddle in the middle, but overall, folks, if we have to, we will. What I mean by that is if we have to maybe sell the break of this 47.16 or the 46.36 level, sure, we can sell and maybe get back down to around 45 bucks. Come in and buy the lows, right? The market could be really scared tomorrow, and it could just sit maybe in this range and not even move at all. It could just chop, right? Or maybe the market can trade up and we can make a bid. Doesn't matter what the market does. It matters what we see when we get in tomorrow morning and what the market's telling us. That's it. I like to prep because I like to write down these levels so we have them. I like to look at the chart so we know where we are structurally. And I'm sure, I don't know how many people are listening in. Wow, a lot of people in here listening on such short notice. I appreciate it, guys. But the point is that we're going to come in and we're going to look at these levels, right? And the levels that we have are going to be important to us because we know now where we know where we have targets or levels of support resistance. I call them targets, but levels of support resistance. We also know that we have a daily bearish channel. Last 7 days have been sideways, waiting for a breakout. What's the first evidence of a breakout? Consolidation. Thank you. We also looked at a 240-minute chart, and that showed us that we had a very sideways and consolidated trade. And now as we look into the 21 range chart, we're still continuing to consolidate. We're holding within the range, but as we start to make our way down towards the lower portion of the range, we have the support. And if it holds, we're buyers at a two-step pattern long inside that trading range from yesterday. If it fails below the two important levels that we spoke about, 46.86 and 47.16, then we're going to sell to the bottom end of the wedge channel. Quickly now, looking at your 13 range chart. This is another fun chart that I was looking at before. Check it out. No bearish channel though, a wedge. Why? This is a faster time frame. We've been looking at very slower time frames. This does represent the last 7 days of that sideways trade. and this is giving it, this is the confirmation. We're in a little bit of a wedge, and what's going to happen soon? We're going to break out of this wedge. That's what's going to happen soon. So basically, what I'm looking for is obviously trading within the wedge. Buying lows, selling highs. And then once we continue to buy low, sell highs, once we get towards the end of this wedge, this is when we're going to explode to the upside or downside. So I'm telling you, this market's going to get ready for a move tomorrow. Why? Because of just because of all the evidence that we have mounted in front of us today. We have this wedge. We have the fact that we've been trading sideways. We have a lot of reasons for a move here in regards to a little bit of news. We have activity here as well that I'm going to talk to you guys about in regards to volatility and the multiple market divergence. The RBOB right now is currently showing a very small offer, 131.98, heating oil 169.90, RBOB 131.98, heating oil 160.90. The Brent WTI spread is just below $2, and the crude trades at 47.65. The natural gas continues to trade at 291.20, which we're going to go over in just a couple minutes. I've been continuing to keep a very close eye on some of the crude oil calendar spreads this morning, and not this morning, excuse me, this evening. The crude oil calendar spreads, just to start off this fresh week right now, are in negative territory and giving us a very bearish feature for today. So right now, keep that in mind, and I would definitely take note of that. I am. Calendar spreads for crude oil are looking bearish already. Volatility, this is today's vol, right? Yeah. Today's volatility at the money. This isn't going to do much for us tonight, but tomorrow morning, remember, just check it. We have volatility today at 47.5, holding 51%. Just write it down. So far overnight, the largest trade in the options, uh, 280, 50 puts, and the 47.5 call. All right, so next is going to be natural gas. Before we go to natural gas, let me get the review worksheets out. I emailed some of you guys these things. These are usually some good information. So as we were saying, guys, let's take a look over to the natural gas now, as we're going to take our top-down approach from the natural after looking over into, as we were just doing it, we were looking at this crude 13 range chart, and boy, that tells you we're seeing some consolidation, so we're going to have to watch the volatility for that market tomorrow. As you guys can see now, natural gas, here we are, 240-minute, I'm not even going to go to a daily, 240-minute, very bearish channel. As of now, you can see we are directly in the middle of this channel, in the middle of the range. I don't really like to fiddle in the middle. Not only are we in the middle of this big bearish channel that we've been trading within for several months, but we're trading now within the middle of the range as well. Levels we want to keep an eye on for natural gas. These are fresh levels that I have in my that I've written down. I'm not even really going to get them off the chart right this second. I actually wrote these levels down earlier. We are going to keep an eye on them and compare them, but I am going to tell you that first and foremost, I was watching very closely the overnight session low, of course, 288.80, and I also have around 281.5 and 280.5. So again, write these down as support levels for natural gas. Again, we're talking, if you're not interested, I'll write them down. 288.80, 281.5, and 280 even, 280 half. And then for upside, 301.20, a bit up above 301.20. We're in good shape for a two-step pattern. Long to bring us up to the high end of the range. It's a real simple trade. 301.20. That's the only level you have to really pay attention to. 301.20 to 301 half. So 3-tick difference. 301.2 to 301.5. That's going to be the 2-tick difference. If we break that to the upside, we're going and we're getting up to at least 320. And again, downside, like I said, 388.80, 288.80, 288.80, 1 half, and 80 half. Now, as we continue on, let's take a look from the 240-minute chart to your 13-range chart for natural gas real quickly. Natural gas 13-range chart continues to show a bearish channel, and right now we're basically running into major levels here as we chop sideways. As we continue to consolidate, I want you guys to keep in mind that the inventory numbers didn't really give us anything last week. Neither did our weather, and neither did really, honestly, our rig counts. So it's going to be a little choppy, and it's going to be nothing but technical analysis. That's all that's really left because, guys, it was freezing last week, and I can't believe natural gas didn't rise. We had crazy inventory numbers, and I can't believe natural gas didn't go. Well, not crazy inventory numbers, and we had some really odd rig counts, and that didn't make it go. So the technicals, that's what it's going to be all about. Like I said, 301.20 to 301 half. You buy a two-step pattern long up to the 20s, up to the 15s and 20s. And as you guys can see right here on the crude oil, if we can and if we do, on the natural gas, if we can and if we do break below 288, 281 half or 280 half, then we are showing offer down to 360 without a doubt in my mind. Okay? Below 380 half, without a doubt, 360 is the level. Real quickly, taking a look at the COT commitment to traders. You guys can see energy commitment to traders report. Crude oil options. This is for options and futures combined for the week of 2006. Total open interest 3.161,470 at the net change of 175,482, 11% year over year. Longs are 298,488. Week over week, that's a change of 16,500 lots. And for shorts, we have 97.51. That's a net change of 1302, and that's year over year down 32%. So we still got a bunch of net longs in the market. Notice that it's 2 to 1. Basically, it's 300,000 to 100,000, and look how many contracts the short side gave up compared to the long side. 3,000 more, and this thing's double its value in the shorts. You can see the WTI open interest and ICE have been rising. The WTI net managed money interest is going a little bit lower. I also was really kind of wanting you guys to take a look at this stuff too, the heating oil, because remember guys, the products it's really important to watch the products. Open interest here for the CFTC for heating oil trades higher. Very bearish for heating oil, which has been pushing down the crude, heating oil, and natural gas together. We also noticed that we have a negative change here for shorts. It's on the week over week figure, another 204. That's negative 20. That's negative 247%. And no, it's not 24.7 either. It's 240, because if you think of last year, where we were last year in terms of gas prices, in terms of heating oil prices, in terms of crude oil prices, in terms of natural gas prices, cut in half from 1 year ago. Look at the chart. Morning wag here. So, but as we continue to kind of finish the COT report, we also have to take I just want you guys to quickly look at the RBOB. RBOB open interest higher, right, just like we expected, and a lot of activity still in that net short kind of trade. They're getting out of longs, buying shorts pretty much. And this is happening in most of my petroleum products here. Natural gas, a little bit of a different story. Open interest has been kind of just decreasing a little bit. The composites net managed money has been down a bit. You can just read these notes on the side here. That's kind of like what I just do. I read the notes. And overall, as you guys can see, for January 6th, short covering comes into play. A lot of liquidation of major positions, and we don't know if we can reconsider this as either it's just the first week back and it's rebalancing Monday, or whether we are really just repositioning here. This was one of the charts that weren't going through on the other screen before. This is an implied volatility chart for natural gas. The cayenne line is implied volatility. 58% was where it's at when it closed up. Its high was 65.3. The yellow is the real price of natural gas falling like hell. And the historical volatility with a standard deviation of 100 moving day, it rises. So you guys see this. This is nuts. We got the natural gas falling like a rock, and we got the RBOB, we got the volatility showing a small bid. Not the best example right there for natural gas, but you'll be able to see the better example when you take a look at it with your own eyes. I'll send it over to everybody who came today. When you actually look with your own eyes, you'll be able to go through all of them, and you'll see for crude, for RBOB, for heating oil, especially just looking at natural gas and crude, though, paying a lot of attention to the levels that we talked about and the advanced price structures that we're in and where we need to break in order to go to follow the patterns. So remember the levels, the location, and also kind of just remember, look at the volatility and look at where the other internals are. So levels and location, that's going to bring us to value for us today. So again, that's just kind of what it comes down to at the end of the day. Natty gas still in this real bearish channel, like I said. Again, it's going to be all about watching 301.5. Can't wait to see what happens around that level. Real excited about the 301.5 level as we kind of continue to proceed on, and we just kind of have to wait until we can get that indication. And once we do, then we will know at least where we're going. If we fail 301.5, then obviously we're going to look for an offer back down. Taking a look at your crude, wedging still, and as I said, as we go down towards the lower end of the wedge, to me, I don't see a big break overnight of this and going lower. I think we'll just trade within the wedge, and then eventually tomorrow morning, once the pit opens up, then we'll get an idea of where we're going to go. That's if we go anywhere tomorrow, because we only have one piece of news. That's really going to be it. Unfortunately, I wish there was more news, but there's not. There's just that little bit of news there tomorrow that we got to get through. Other than that, it's going to be pretty slow looking at the price action. So take a look here, guys. Again, all you guys got to do, it's pretty simple. Traders Audio, stop billing everybody. So you guys are all coming in through my site from now on. Just got to go into the members section here. Got to click login. And then you're going to log in. Another thing I want to show you too are our partners, our blog. That's going to be really good. Our blog is awesome. You know what? I'll show it to you. See? I really didn't get much into it yet. I mean, I'm still working on it. But the blog's going to be really cool. We got our partner sites. True Squawk. This is where the premium package is available on TrueSquawk.com. This is one of our partners. That's me in the video. And that's pretty much it, folks. You know, it's got one other thing I want to show you guys real quickly. Our other partner sites that we have. You guys know it's the best. Crude Squawk. Newsletter, morning prep. Newsletter, morning prep. And market, energy market prep. So again, all right here. That's me too right here in this quick video we made. We got sample newsletters that we were talking about the other day.
Hello, ladies and gentlemen, Marty Errico.
So if you want a sample newsletter, let me know. Click on the tab. We'll get you a sample newsletter. And that's it. Remember, like I told you guys, I'm on this new site. I'm gonna get a form. It's just not up yet because I'm not ready to put it up yet. I'm gonna get a form and a whole chat room, guys, attached for our advanced members. Well, every member is the same. For our members, we're gonna have a chat room in the back end, and we're also gonna have a trading forum, like where we can share indicators and stuff like that. So between the trading forum and the chat room, that should be done within the next 2 weeks. And then, of course, guys, the transition over to this wonderful site here. Again, I cannot wait till the chat room comes in. When you guys see this chat room and the forum, it's really cool stuff for traders, and it's going to be handy, useful stuff. So that's it, guys, for me here. Thank you very much for joining me this evening. And I hope you guys got something out of it. I know I went a little long, but don't worry. Tomorrow morning, early AM audio, 8:50 a.m. Eastern, I'll go through it really quickly. We'll look into all the major pieces here, guys, of the markets. And, of course, as always, if you need me, please call me. I'm here for you guys. Give me a ring tonight. If I missed you yesterday, I called a couple of you guys. And if I missed you, call me back now because I might have forgot. All right. Have a wonderful day, guys. Have a nice evening. See you tomorrow morning.